Piet, something like that is, I know it's very early days to talk about it, but if you consider this economy is not doing quite as badly as some of those in other parts of the world, and the whole sporting bonanza that we're seeing now almost gives us a little bit of a feel-good attitude, but also good injections of capital. The IPL, the Confed Cup, the Lions Tour, and then, of course, the World Cup next year. Are those issues that you would look at as part of the long-term picture?
Well, not really, but they do at least raise the profile of South Africa internationally in all sorts of different areas. You've got India, you've got the UK, you've got the World Cup, so in all sorts of different geographies, South Africa's profile is being lifted, and I think that can only be good. How do you quantify that? I'm not going to start trying. I think there's a lot of economists out there much smarter than I am that can maybe try and quantify that sort of thing, but it does have a positive spin-off in terms of our image and people's perceptions of the country. And, when you sit there at home, wherever you are, and you think, where are you going to visit, and the World Cup's just been held here, or the Lions have just toured here, it's sort of, you rise to the top of the list. So I think it generates after spend as well, even after these tournaments.
I'm wondering if, with all the stadiums that we've built and with the stable political situation in South Africa, in contrast to so many other countries in the world, if we don't become more increasingly a sports mecca. It could be a nice booster to this economy that we haven't even thought of.
That's right, and the climate. I think the climate plays a big role in that. I think stadium-wise, there's tough competition out there, but in terms of climate, there's less.
Talking about climate, the investment climate at the moment will no doubt be influenced in two ways. The economy is contracted worse than anticipated, but on the other hand, it might also spur further interest rate declines. How are you reading all that?
Look, in terms of the GDP number, that's history. I mean, we're talking about the first quarter. We're already in May now. That's over. And I think the bulk of that, I haven't looked at the numbers, but I think the bulk of that would have come in the commodity-type sectors. And we saw that in share prices declining. Anglo's cutting its dividend or passing its dividend for the first time ever. So we've seen those effects in the economy. I think when you invest, you're paying a price today for a share, and you're acquiring cash flows that run out the next 20, 30 years. So this quarter, or the first quarter's GDP number, has no influence on that at all. So it's not something we would take into consideration. It's tough out there. There's no doubt about it. But it's in these sort of times that companies can take the opportunity to restructure, get the cost base down, and create the platform for future growth. So it's actually an exciting time to be an investor.
Well, I was going to ask that. As an investor, you've seen shares come down very sharply to the beginning of this year and then lift off that base. With this kind of economic data, it's possible they'll go back again, and I guess that's when you can fill up.
Well, if anybody sells shares based on the first quarter, January to March's GDP that declined, we'd be willing buyers. I mean, I think we'd be on the right side of that trade.
When we spoke last week, you said there was only a handful of shares that you'd be buying.
I think I was quite saying 4. I'm not sure it was 4, but
4 or 5.
Few.
As against 40
yes,
that
that's right,
were available before.
I think that was the point.
And that, from your perspective, you'd like to see those 40 becoming available again.
Look, at the end of the day, we enjoy it when prices decline, because that is when you have motivated sellers, and when you have motivated sellers for the long-term investor, the price is right. So that's what we enjoy. And so January, February was a fantastic time for us as long-term investors.